Hello and welcome to India Today Business Today Budget Roundtable, and joining me in central Delhi is just few hours from Budget, Chairman CBDT Mr. Ravi Agarwal, and also joining me is Chairman CBIC Mr. Vivek Chaturvedi. Thank you, gentlemen, and I think two big announcements that have come in from both the departments, but let me begin with you, sir. And the first one has to be the big blow that has come to the markets in terms of the hike in taxation on F&O on the STT side. Could you break down for our viewers what has been the rationale behind it?
So before I answer this question, first I would like to also give the entire perspective about the budget. And if you would recall that last year we had simplified the language of Income Tax Act 1961, and the Parliament passed Income Tax Act 2025 in August of 25, which is going to be implemented with effect from 1/4/26. So at that point in time, the focus was only simplification of the language, so that you make it easy for the taxpayer to understand the provisions of the law and to then for better compliance. So this is the second step that has happened in this budget, wherein certain fundamental structural reforms have also been made in terms of decriminalization, in terms of optimizing the assessment, the entire process of assessment, providing more opportunities for the taxpayers to come clean and comply. In the sense that even if a notice has been given, the taxpayer is now given an opportunity to actually come forward and comply. Or even where assessment has already also been done, even then the taxpayer has the opportunity to come and not pay the penalty, but then pay some additional tax and settle the case, which actually addresses the issue of more litigation. So therefore that prompts the taxpayer to actually finish off the issue and avoid litigation. So this is one big component. The other is decriminalization, as I mentioned, because that was also the concern of the taxpayer, so that has been done. On the Black Money Act side, there's a window now available to the taxpayer to actually declare small taxpayers who have some assets or who have some income which remains to be actually disclosed. So that's also an opportunity to the taxpayers. Then you have in the budget fundamentally, conceptually, some promotion to the industry which is relating to data center. Then on the advanced pricing agreements, on the safe harbor. So this is an entire gamut of activities or issues that are actually that find place in this budget. And taken together, stage 1 and stage 2, when we actually start implementing this act from 1/4/26, it is a comprehensive reform that you would find in the Income Tax Act 2025, right? Which is poised to actually provide a much better tax administration and experience to the taxpayer and prompt compliance. So that is one big ease of doing business for the taxpayer and ease of living for the taxpayer also. So we got to see this in this perspective. Now coming to the issue of STT. The STT on the cash segment has been kept as it is. It is only on the STT on F&O segment that has been raised. Now why that has been done? If you see the growth in the F&O transactions, volumes involved, the growth is exponential. And as on date, the statistics reflects that the overall volumes are about 500 times the GDP of the country, right? And in most of the cases, the retail investors, they are actually incurring losses, right? So therefore, the nature of the trade is largely speculative. So basically to discourage this retail investor from actually participating in this exercise, this attempt has been made. It is not a case of a augmentation of revenue that you have increased the rates. It is basically from this perspective you see, then one would find rational in it.
So to what quantum are we looking at this reduction? Because 500 is a very big number that we are talking about.
So it is, one cannot say that, okay, with this, the reduction would, how much of the reduction would happen. One cannot actually estimate it, because that is basically dependent on the market dynamics. But then this is just an attempt to address this issue. Only time would tell how much impact it would take.
Okay, got it. Chairman CBIC, let me come to you. At the helm of announcements, this budget has been the customs front of it. Yes. I want you to take us through the important announcements, and a very important question is this also in the backdrop of the big trade deals that India is signing, that we are wanting to make trade easier.
Well, if you look at the budget announcements, largely two parts to it. One, of course, is the rates of duties and the customs exemptions that we have given. I would say that's been a very, very calibrated approach, largely designed to help the domestic industry, give it a protection where it is required, look at certain very key sectors like energy security, like our MSMEs, look at our export efforts, particularly seeing that import duties on certain very critical components that will go into our export products have been very consciously lowered. That is one part of it. The other part, of course, is how are we promoting our exports? Apart from the duty part comes also the process reforms which have been announced today. The process reforms are largely centered around the concept of trust. We are looking at trusted entities. We are looking at giving facilitation to the trusted entities. That facilitation extends to clearance processes, like a faster clearance of customs goods, both at import and export. It also looks at the facility of deferral of duty, so that you clear your goods today and you only pay once a month. That's a very important announcement that has come out today. Looking at our courier exports, because that is actually where our MSMEs gets a platform for international exposure. So we have removed the value limits on courier exports from the current 10 lakh limit. So now you can actually export through a courier mode, which is more agile, more faster, more easier. We've addressed issues of returns and rejects of courier consignments, where identity needed to be established. We are now going to do it based on the documents, which obviates the need of opening packages, damaging goods, generally holding up the commerce of the country. We've also looked at our tariffization. We've looked at giving a predictability and certainty to the importers. We've looked at our exemption notification. We've made in most of the cases, the exemption notification rates have now been transposed into the tariff rate. So if you are an importer, you don't have to look at the tariff and look at the entry in the notification. We've created new tariff lines for the ease of doing business. We've reviewed a slew of exemption notifications where imports were not happening. So there has been a very, very conscious, a very calibrated approach towards this. And the idea is that it helps the domestic industry, both in terms of increasing its versatility, competitiveness, and also promoting Make in India and Atmanirbhar Bharat.
Okay. I know the press conference addressed on the fact that it was not an amnesty scheme that has been introduced, but something on the similar lines. And you've emphasized on the fact that the idea is to do away with extreme compliance, to move towards simplification, to make ease of doing business easier, and at the back door of trade deals which are happening. Could you give us insights on this?
You're talking about
the amnesty.
Well, I wouldn't say it's an amnesty, first and foremost. I think we were looking at it from the perspective of the litigation, and we were looking at it from a very specific perspective of the penalty provisions under the Customs Act. Now, today, if there is a show cause notice, it is settled by way of the payment of duty, interest, and penalty. Penalty somehow has a negative connotation attached to it. So we looked at it in a certain degree of detail, and we have tried to ease that by changing the definition of penalty in the Customs Act to give a treatment that is not penalty in real terms. It's more of a demand for the duty that was charged. So it removes that connotation, and it also helps in for an entity if it's going for a disclosure, for example. So it is designed largely for that. It's not really as such an amnesty scheme that a certain degree of litigation is totally waived off the books. It's not like that. But it is a step in the direction which I said earlier, which is the step of the government trusting entities to come into the mainstream, to a certain extent settle the dispute in an amicable manner, and move on in life.
Okay. Is there more to come on the customs front, sir? More work
Well,
is needed.
You see, customs is a very, very evolving and a very dynamic environment. It's a transaction-based system. Global headwinds, demand-supply situation, external realities, economic realities, everything impacts the customs supply chain. So I wouldn't put a time frame, but at the same time, I wouldn't, put it in a box that this is done and dusted. The government is extremely aware of the fact that because of the nature of customs, it's always important to keep a tab on what is happening, what are the pain points, and wherever the occasion arises, even in the future, when there are certain processes to be eased, certain bottlenecks to be removed, the customs will definitely be in the forefront for bringing in those things so that the pain is alleviated and the process becomes smooth.
Okay. Chairman CBDT, let me get back to you. And 1st April is the day where the new act is going to be implemented. A lot of work that you've already done. You've given re-emphasis on the act to us. I want to make some emphasis on the MAT clarity and flexibility. And also, sir, if you could, relating to that, give me some idea about how has the new tax regime been doing for the taxpayers?
So far as the new tax regime is concerned, when we talk about taxpayers for individuals, HUFs, essentially whose accounts are not audited, non-corporate. So about 90% of the taxpayers have moved to the new regime. So far as corporates are concerned, yes, I think in so far as the income, if you see the income is about 60% of the income is now in the reflected in the new tax regime. So that is as far as the new tax regime's profile is concerned. Now, when we talk about MAT, so MAT was a legacy. Basically, we have been implementing the way it worked was that it was the companies were required to pay tax based on their book profit. And 15% of the book profit was the minimum alternative tax, as the name suggested, was the minimum alternative tax that the companies had to pay. Now, this minimum alternative tax was to be compared with the tax on the normal tax income, on the normal total income, which they would compute as per the Income Tax Act. Now, if the tax on the normal income was more than the minimum alternative tax, then this differential, the excess, would get offset by the credit that they may have actually carried forward from the past year. Now, if suppose this was less than the minimum alternative tax, then they would pay this minimum alternative tax, and whatever was the differential here, that would be got carried to the next financial year. This is how it worked. But that means it was, if this would have continued, it would have continued in perpetuity. So therefore, before we thought that when we move to the new regime, let us put a closure to this. And therefore, now the proposed amendment is that instead of 15%, the minimum tax, not the alternative, minimum tax would be 14%. Meaning thereby that there would not be any credit that would be earned going forward. But whatever credit has been accumulated over the past years, we have to honor that credit naturally. And therefore, if that credit is to be taken and availed by the taxpayer, then the person has to move to the new tax regime, which has a tax rate of 22%. So this credit would be actually available to the taxpayer, to the corporate who moves to the new tax regime, and the credit would be to the extent of 1/4 of the income that he would reflect, tax on the income. And the time available to actually take care of this credit would be the same which was available to him in the old regime itself. So that's how the MAT as such as a scheme, so far as the credits are concerned, those would get ended, and the credits as accumulated on 31st of March would freeze, and going forward the minimum tax would be 14%. The reason why 14% has been kept is because since the credit would not flow to the next, would not get accumulated, that benefit based on the net present value has been calculated, and this tax has been reduced.
Okay. I know this is just a slice of the main pie, sir, because there is a lot to talk to you, but because we are short on time, I'll have to call this a day. Thank you very much for joining us on this conversation. I'd call the taxmen of the country who are tightening the knob across the sectors. Thank you very much for joining us, Chairman CBIC and Chairman CBDT.
Thank you so much.
Thank you.
Thank you.